Is Bitcoin warning us about an upcoming liquidity crisis? That's what we're going to answer in this video. Before we get started, please make sure to like the video and subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a little tip. Now let's get into it. The Bitcoin price has been dipping. There is no question about it. Bitcoin broke below 100K. It broke below 90K. And Bitcoin is currently sitting around $85,000 per Bitcoin. So it has been a rough month. Bitcoin has dropped over 20% over the past month. And Bitcoin just hit a new all-time high not that long ago in October at 126,000. And to think that we've dropped all the way down to $85,000 is definitely a little bit concerning. So let's go ahead and take a look at a chart of the Bitcoin price over the past month. As you can see, it does not look pretty. It's all red and it's all down. Now, towards the end of that chart, you could see that Bitcoin has bounced a little bit. We kind of bounced off 80K this morning, and we did get some good news today. The Fed came out and said something, and the odds for a December rate cut jumped up a little bit, and that is going to help Bitcoin. So Bitcoin liked that news. And then we also got news that Japan has passed their stimulus package that they've been talking about, that they proposed, and Bitcoin likes that when governments come out and do stimulus and print money. So we are starting to get some good news here, but definitely very concerning to see Bitcoin drop this much so quick. Now, why is Bitcoin dipping so hard? I think the main reason is that dollar liquidity is starting to get very tight in this global financial system, and Bitcoin is a great measuring stick for liquidity. The reason that Bitcoin is a great measuring stick for liquidity is, for one, Bitcoin is a very liquid asset. So when there aren't enough dollars sloshing around out there, when people are having trouble paying off their debts, when people are getting laid off, when we're seeing signs that liquidity is tight and people need dollars, Bitcoin is one of the first things that people will sell, right? Because it's very liquid. It's very easy to sell Bitcoin and get dollars if you need dollars. On the flip side, if liquidity is rising, right? If governments are printing money, if we're seeing the money supply shoot up, typically people move into Bitcoin to hedge against that dollar debasement, right? To basically hedge against that inflation. So let's go ahead and take a look at a chart of the M2 money supply, which is basically just a measurement of the dollars out there, right? All the dollar credit out there. And as you can see, following COVID in 2020, when the government printed all of that money and gave it to us and businesses, we saw the money supply shoot up, and that's when Bitcoin really shot up. Bitcoin went from below $10,000 up to around $70,000. And then if we look at this chart, in 2022, when the money supply started to contract, when the government started raising interest rates fast, when they started doing quantitative tightening, which is where they sell securities into the market and they take money out of the market, this is when we saw Bitcoin really struggle, right? Bitcoin dropped from 70K all the way down below 20K. And now we're starting to see that the money supply is ticking back up a little bit in this chart, right? But it's not ticking up very fast, right? The thing about this credit-based system is the more debt that it goes into, the faster the money supply kind of needs to grow, right? It's kind of like this doom loop that's just going to keep getting worse and worse. And the thing about the government is they don't want to do a ton of money printing right now. They don't want to come in and do quantitative easing because it's just going to lead to prices going back up like we saw following the COVID stimulus. It's going to lead to more inflation, and then they're going to have to try to raise rates again or do quantitative tightening. So they're trying to be very careful about increasing liquidity. But the thing is, if they don't start increasing liquidity a little bit faster here, they're going to run into some big problems. This dollar-based or this credit-based system really needs more dollars to survive. And right now, we're seeing signs that there's just not a lot of dollars out there. Now, the Bitcoin price dipping is not the only sign we're seeing that dollar liquidity is getting tight. So we're going to get into some of these other signs we're seeing across the economy. But before we do get into those, I do want to mention that there are some other factors impacting the Bitcoin price and some other reasons why Bitcoin has dropped more than other assets like stocks. A main one is that we are seeing a lot of these Bitcoin whales selling their Bitcoin, these people that have been holding Bitcoin for a long time, and it's definitely something that is a bit concerning. So according to Grok, over the past month, we've seen long-term Bitcoin holders sell over 815,000 Bitcoin, and that makes you think, why are they doing this? Now, a main reason that makes sense is these Bitcoin holders have been holding Bitcoin for over a decade, right? They've been holding Bitcoin for a long time. They've probably seen a lot of appreciation, and maybe they want to buy a new house or travel the world or something, right? They want to spend some of their Bitcoin, and I get that. Or maybe these long-term Bitcoin holders see something in the markets. Maybe they see that liquidity is getting tight, that we could see asset prices come down. Maybe they want to sell now and buy back in at a lower price. But it's definitely something that we want to keep our eye on. With these large holders selling Bitcoin, it's not a very good sign. Let's get into some of the other signs we're seeing that liquidity is getting tight. For one, we're seeing that financial institutions like the banks are showing a lot of stress. We've seen that bank reserves have gone to very low levels. Bank reserves are basically the cash that these banks keep parked at the Federal Reserve, so not a great sign. We've also seen that the reverse repo facility has been drained. Now, if you're not familiar with the reverse repo facility, this is basically a place where the banks and other financial institutions could park their extra cash and earn interest from the Fed, and it's basically been a good measuring stick of liquidity out there, right? When the banks have a lot of extra dollars, they'll park them in this reverse repo facility, and when they don't have a lot of extra dollars, they're taking them out. So we have seen that the reverse repo facility has emptied completely, basically showing that these banks don't have a lot of extra cash on hand. They don't have a lot of liquidity. And then we've also seen that these banks have been borrowing money through the Fed's standing repo facility overnight a little bit more. And basically, the banks typically like to borrow from each other in order to meet their obligations. But if they don't have enough money to lend to each other, we start to see these overnight lending rates for the banks spike up, and these banks sometimes need to go to the Fed to get money. So we are seeing more banks do that. Now, we saw that around the turn of October to November, so we haven't seen it recently, but it's basically showing that these banks are a little bit low on liquidity. Another main thing we're seeing is a lot of layoffs and bankruptcies. We have seen a ton of bankruptcies this year. 655 large companies have gone bankrupt, and that is the most in 15 years. Let's go ahead and take a look at a little visual here, which shows these US bankruptcy filings by year. And as you can see, in 2025, up through October 31st, we have seen a ton of bankruptcies. We haven't seen this many bankruptcies since 2010, so that is not a great sign. We've also seen a ton of layoffs, and I actually just put out a video about layoffs, so you should check that out if you haven't already. And now this is due to multiple factors. We've obviously had the Doge layoffs, right? We've seen a lot of companies looking to cut back and become more efficient. But another main reason why so many people are getting laid off is we are seeing signs that the economy is weakening, right? That money is tight, and these companies are looking to cut back because they're not seeing as much revenue, right? There isn't enough money out there, not enough dollars, and that is leading to companies laying off employees. We're also seeing asset prices falling. We started the video talking about Bitcoin and how Bitcoin has dropped from $126,000 all the way down to around $80,000. And typically when liquidity is tight, when there are less dollars out there, we see assets priced lower in dollars, right? It makes sense. And Bitcoin is not the only asset that is suffering. We have recently seen that the stock market is starting to come down a bit. So let's go ahead and take a look at a chart of the S&P 500. Now this shows the S&P 500 over the past 6 months, and overall, over the past 6 months, it's actually been doing good. But as you can see towards the end of this chart, we're starting to see that stocks are coming down a bit. And I think that if we don't see the Fed come in and do QE, or we don't see dollar liquidity increase, I think that the stock market is going to follow Bitcoin and start heading a lot lower. As assets have been falling, the dollar has been rising, and this makes sense, right? If there are less dollars out there, if there is lower liquidity, less supply, that is going to lead to the dollar going up in value. It's just simple supply and demand, and as the dollar heads up in value, it's going to lead to Bitcoin, stocks, gold, all of these other assets being priced lower in dollars. Let's go ahead and take a look at a little chart of the dollar index, which has risen back above 100. It's been doing good over the past month, and the dollar index is up around 1.67%. So if we don't see liquidity increase, we could see the dollar continue to strengthen as people fight for the low amount of dollars out there, in order to pay off their debts or pay for the things that they need to pay for. And with that, that is not going to be great for the markets. Now let's turn our eyes to the Fed for a moment, because obviously what the Fed does is going to have a big impact on dollar liquidity. There's been a lot of buzz about this December Fed meeting. For a while, it seemed like we had a rate cut priced in back in October, but then we had our October Fed meeting at the end of the month where the Fed basically said that we might not get a rate cut in December. We also saw that we had this government shutdown and we're not getting this jobs data and this data for October. And a lot of people were thinking, hey, if we don't get bad data for October, it's going to be less of an incentive for the Fed to cut in December. But apparently something came out today, and the odds for a December rate cut have shot back up above 50%. Currently on Polymarket, the odds for a 25 basis point cut are at 61%, and the odds for no change to the Fed funds rate are at 37%. So this would be great for dollar liquidity if we did get a Fed cut, and we have seen that the markets did like this news a little bit today. I don't really think it's a huge deal, but definitely getting that December rate cut will help out a little bit. I think that what the markets are really waiting for, and what assets like Bitcoin and stocks really want to see, is quantitative easing, aka money printing. This is where the Fed comes in and buys securities out of the market, putting them on their balance sheet, and they push new monetary units into the market. And with that new money out there, it leads to assets shooting up higher. So we haven't seen the Fed do quantitative easing yet, but with these signs we're seeing of tighter liquidity, I think that we could be seeing quantitative easing coming soon, and really it's just a question of when they're going to do this. If the Fed does not act soon, if they wait to do quantitative easing, then we are going to continue moving closer to a liquidity crisis. Now, what would a liquidity crisis look like? Well, if there aren't enough dollars out there, then we'll probably see asset prices continue to fall. So if Bitcoin continues to fall, that's probably a sign that we're getting close to something breaking in the dollar system. We'll also see people starting to default on their debt. So as the dollar continues to gain strength with less supply out there, people will be unable to pay back their dollar debts. As more and more people can't pay back their debts, we'll see these lenders, the banks, take big losses. And that's when we start to get bank failures and bank runs. And that's when the Fed actually has to step in and increase liquidity, right? If they wait, eventually something will break and they'll need to come in and do emergency quantitative easing. And that will push the money supply back up, and then we'll see asset prices rise. So this is one scenario. We could see a crash in asset prices further down before we see them recover and head back up. In this scenario, I actually think that asset prices could really rip on that rebound, because if we do get some bank failures or a credit crisis, it's going to take a lot of money printing to fix that situation. Now, the other option for the Federal Reserve is that they can act preemptively, right? They can do quantitative easing sooner than later. And I think this is the smarter option. Why keep liquidity so tight and have something break when you can step in right now and provide some relief to the economy? You can avoid something like a banking collapse. So Either way, whether they wait and we see a crash, then a pump with asset prices, or they step in preemptively and asset prices recover, I think asset prices are going up, right? They're going up long term. So I think if you have a long term mindset, you're going to be fine with an asset like Bitcoin, but it is tricky in the short term, right? Could we see the Bitcoin price drop a little bit more, even from $80,000 before we see it pump up higher? And it really just depends on the macro environment. What is the Fed going to do? Are they going to boost liquidity soon, or are they going to wait too long? And are we going to see a crash before things get better? If we do get that big crash, I do think that we're going to see a massive recovery for Bitcoin and probably other assets like stocks as well. So I think the main lesson here is you just got to be patient and think long term. We know that the money supply has to go up in this credit-based system. So as long as you're betting against the dollar long term, I think you're going to be all right. That's going to wrap it up for this video. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.